Good afternoon, I'm Paul Sanger from the Finance News Network and welcome to The Last Word. The Last Word is a sort of a review of what's been going on this week, and my guest today is Chris Gosselin from Fund Monitors. Chris, welcome to the show.
Good afternoon, Paul. Thank you.
So Chris, it's been a very busy week, lots been going on, but I think we're going to start the show today of the events obviously of the weekend and the attempted assassination of Trump and the implications of that and how that affected the market this week.
Well, that's been the story of the week, really, isn't it? I mean, it's almost the story of the election campaign in the US, and it's been an odd sort of campaign anyway. You know, Trump is no spring chicken. Biden is difficult not to say that he's over the hill. It's accentuated, I think, the problems that Biden's got, and it's strengthened Trump's positioning, if nothing else.
Well, and most people now think that Mr. Trump is a shoo-in come the election, and in true Trump fashion, he was back on his feet, 24 hours later, and making some interesting comments out there. Comments on Taiwan, which obviously had a big impact on the share market last night. I think I quote him that Taiwan stole the semiconductor business and kind of retracting any support for Taiwan going forward, and it caused a bit of a ruckus in the market last night.
Yeah, it wasn't so much saying that, I don't think, as much as saying the Taiwanese have got to pay for America's defence or support in defending themselves against China. And by paying, he's going to say, hang on, you've got 90% of the chip manufacturing and we want it back here. I think the issue with that is it's typical Trump rhetoric, really.
Yep.
I mean, whether it's Ukraine or whether it's Taiwan, he runs a pretty hard on headlines.
Yep.
The question on everyone's lips, really, everyone's mind is, if he gets in November, does he follow through? And the answer is probably yes, he does.
True, very true. And we saw at the beginning of the week, we started to see this rotation out of the big mega caps, the tech stocks, obviously accentuated overnight based on those comments. But what I found really interesting is these conditions appear to be right for the share market to start broadening out, and for some mean reversion to benefit small caps, which have significantly underperformed their large cap cousins after the past 3 years. This week alone, the Russell 2000, the small cap index in the US, outperformed the S&P by the widest margin that we've seen in a very, very long time. Obviously fueled off to the cooler US consumer price index. And look, it looks like the US are certain to cut rates in September. People would say Australia's way off that at the moment, but hopefully, that small cap fever can rotate to Australia. But where do you think, from an Australian perspective now, if the US are going to cut in September, does that put pressure on the RBA here to keep rates, flat? Because there's a lot of talk that the next one is going to be a rate rise.
Well, you've got two different economies here. It's quite interesting. The US looks as if they've controlled inflation. So they've got inflation down to that 2 to 3% mark. Unemployment in the US, 4.1%, pretty much the same as here. So they're slowing their economy undoubtedly, and that's sort of happy medium, the Goldilocks.
Yep.
So they're going to bring their broad inflation down so they can afford to take their foot off the rate rises. Australia's got a different problem. We've still got inflation that's high. The RBA has consistently said, it doesn't matter whether it's the governor, the deputy governor, you name it, they've said inflation is our number one target. They can't afford, given inflation's their number one target, to reduce interest rates, but our economy is probably weaker than the US economy. We're in a pretty sluggish economy. So the risk for the Reserve Bank is they keep interest rates high, or they increase them one more step, as the media and a lot of economists are forecasting. But that's going to damage the economy, or potentially damage the economy. And sooner or later, if that continues, they're going to get to a point where they keep interest rates high, and that gets us closer to a recession, and they're going to have to reduce rates.
Yep.
So the RBA is in a tighter spot than the Federal Reserve, I think, and it's quite interesting. As far as the US market and that rotation goes, sure, that's happening because, you know, the Nasdaq's, to the end of June, Nasdaq went up 27, 28%, S&P 500, 24%. Poor old ASX 200 went up 12.5%. So it's really lagging. But the US market has been driven by these tech stocks. If those tech stocks are going to remove some of the hype there, and inflation's coming down, interest rates are going to come down, interest rates are going to help the lower end of the market, where interest rates haven't really affected those tech stocks at all.
No, I got you. And some of the other headlines this week, you know, the ASX climbed over 8,000 points for the first time, you know, led by the speculation the US Federal Reserve could kick off the rate cutting. We also saw China's economic growth slow to its lowest in 5 quarters. I think the GDP expanded by 4.7% in the second quarter, missing the 5.1 estimate. New Zealand's inflation slowed to a 3-year low in the second quarter, and Australian unemployment rose by, I think, 50,000 in June, following the 39,000 increase in May, with the unemployment rate rising to 4.1%. So there were sort of the headlines that sort of grabbed me. And then we go into commodities. Gold. It is gold. Gold hit a record high of $24.69 an ounce, following the previous week. And a lot of people think that, you know, the gold price will continue to rise, particularly if we're going to go into, you know, interest rate cut environment. What do you think?
Well, I'm not a gold bug or a gold expert. You've just come back from that mining conference in Noosa. Tough job. Tough job, Paul. You've had a good week. You've been up in Noosa on the beach sunning yourself.
Let me tell you, it's very cozy in Noosa, but some amazing companies that presented over the 3 days. I sat down with at least 30 sort of companies, uranium plays, gold plays, iron ore plays. What surprised me, the amount of people there, over 1,000 people at the conference. Every booth, every company was getting grilled, which also shows you that I think investors are more optimistic about the market and more optimistic on the small caps. So the CEOs were getting a good working over.
Yeah, I think it's interesting because there's always, you know, small caps have been ignored really for a year or two. That rotation is going to come back. The small cap managers that we speak to always say, look, yes, it's been quiet. There's been, you know, apart from a couple of IPOs, there's been no activity in the capital raising section there. But when that market does move, it moves very quickly. And unless you're into that market at the start, you're likely to miss out on a fair amount of the first move up. So that's something that's been brewing for a while. And maybe it's the small cap miners or the mining sector that will lead that.
So bringing things to a close, obviously, you know, it had been a great week for the markets until the move, obviously, in the US overnight, and it looks like it's going to be a pretty weak finish here today. But looking ahead to next week, I guess everyone is going to be looking at whether Biden does step down. I believe Obama came out publicly and sort of withdrew his support. So that's something for us to watch out next week. And whether we get continuation of this rotation starting off next week, we'll have to wait and see.
I think next week's going to be very interesting. Biden seems to be the only person who doesn't think he should step down, but I think he's basically on borrowed time from that perspective.
Chris, absolute pleasure having the studio today. Thanks very much indeed.
Nice to see you, Paul. Thank you.
That's all we have time for from The Last Word. We'll be back next Friday. Thanks for your time.